Hello traders, Nick Shaheen looking at banks. Today is the 11th, August 11th, and the markets are rallying. S&P is but a hair away from the all-time high. Nasdaq is red when the small caps are again outperforming, so the rotation continues. I've seen rotations before, but the flip-flop on this one, the speed of which is flip-flopping between Nasdaq and small caps is mind-numbing. And I think today what makes it even a little more pointy is the fact that banks are rallying. We had a couple of headlines, one of which is bogus and the other one is not so bogus. And the first bogus headline is the fact that Russia has a vaccine. I don't doubt that they have made progress, but it's a matter of what they describe as, okay, it's approved. So they're not ahead of whatever the rest of the world is doing as far as vaccine efforts, but they chose to approve it way ahead of everybody else, even with just whatever it was, 100 people versus thousands and thousands and thousands of people that require testing here before they say, okay, we can approve it. So that headline is rallying the stock market in general. Banks are specifically rallying, and most people don't know why. It's because yields are, bonds are falling out of bed, so the yields are rallying. So that is a liar rally, in my opinion. Because it's not because the fundamentals of the banks got better, although higher yields could allow for higher net interest margin. It's not a necessity, so it's just a perception. So I get nervous when everybody loves the bank. I've traded the bank really well, and I shared it with the rest of the people that follow me and get my newsletters. By the way, before I forget, if you don't subscribe to this YouTube channel, it's free. Just hit subscribe and put the alert, because I do release videos every so often. And down below in the description, there's a link to the chat room. We do this stuff all day, every day, plus the write-ups. So the idea of everybody loving the bank makes me nervous. The bank's value is just that, in the value. It's not in the upside potential of their stocks, of what they can do. So the idea is to don't chase the headline, because you're gonna, unless you're early in the process. So if you're confident that this headline has 2-3 days left on it, go by all means. So let's put a visual to it. This is Bank of America daily. It's nothing fancy. It's just a daily chart that everybody looks at. And clearly the bulls are in charge. You get higher lows, but they don't sustain. They have great rallies and then they give them back. They have great rallies, and I rarely buy rallies, but I always sell puts and put spreads in the fear. So when everybody hates them, they're falling into zero, and they're not going to zero. They passed all tests, and they have gobs and gobs of money on the balance sheet, and they're supposedly fortresses. So every time they fall, this is where you should have been long, because it's falling into support. Buying it up here is having missed out on a whole bunch of it and hoping that there's some left in it. So if I were trading this stock, regardless of who the name is, I would either stay out, short it, or chase it above 29. So if I was to short it, I would sell a call spread at 29 with a tight stop. If I'm wrong, it goes above 29, I close it for a small loss, or I flip it into back spread. Otherwise, I wait for the breakout, because that will bring another leg higher by a lot. They may even close this gap right here. But right here, it's going into a major prior fail and a prior pivot zone. There's a little cluster of candles here that tells me that this area has memory. So it might take them another cup or handle, whatever you want to call it. So it might take them another fade with another higher low. So it's not like I'm calling it end to the whole rally forever. I'm just saying, these are not Tesla, and these are not technology stocks to where semis to where they can run and run and run. The markets overall are at all-time highs. If for whatever reason the S&P has a tizzy, these are not going to rally or by themselves. They might rally for a day if yields continue to spike. Oh, I forgot to mention the second reason. The first headline I said was a bogus. The second headline is not so bogus, and something that I've talked about in previous videos. Inflation. Producer price index came out hotter than expected. So I said all along that the assumption is that the Fed will save us, that the Fed has unlimited tools. Not so. The Fed has unlimited tools as long as inflation is in check. As soon as inflation gets in the headline 2-3 months in a row, the Fed's nuts get cut off, because they cannot let that happen. They said they would let it run hotter than usual for a period of time. I bet you when they're facing that beast, they will change their mind quickly. So nevertheless, PPI is one measure of inflation. CPI, I think, is tomorrow. So if we get more of these hotter than expected, then the Fed put is in doubt. So, and that will flip sentiment. And sentiment is the only variable right now. The makeup of the market is bullish. The only variable is sentiment. Remember in 2018, that was what caused the flip. Sentiment, because the Fed said, I'm bullish. Sentiment flipped. And then sentiment flipped back bearish in 2019 when we started with the China shit. So that was a viable dip because of the situation we had, full growth. I mean, we had growth all over the world and full employment in the U.S. Well, now it's not the case. We still have, according to the government, 16 million people out of work and 11% unemployment, 10, 11%. These numbers don't gem, so somewhere it's high, a lot of people out of work. Definitely not the situation we had last year. So if you know what hits the fan, we're going to be in trouble here. When the stimulus stops, we're going to be in trouble. That's another headline that's looming, the stimulus. I don't think they're going to pass anything because they're going into, guess what? The people that used to get $600, at least in California, I know from friends of mine at the gym, got $400. So whatever executive order the president did, he's a hero to get them $400, and that's a talking point for him. Judge him or not, he can say, when the Democrats couldn't pass the bill, I acted and I got $400 out of $600. So yay me kind of a deal. So he's got that talking point. He has no incentive to pass anything else, so the Republicans are probably going to stonewall this conversation there. Regardless, if it comes, the S&P might jump up. The bottom line is this is not an obvious buy point, and this is just one. Now, the cream of the crop is JP. Similar situation, only even worse, because this one has a ledge right here. So Bank of America, let me go back. I think past, okay, it has a ledge right here. So similar situation. I say that again. If you were long on the breakout from here, kudos. You still have a few ticks maybe, but it is. The idea is to not get in where it's going to fail or it has failed the prior recently. And in this case, it's in open air relative to this, but it's coming into prior failure point. Again, this is a daily chart. It's not anything fancy. I like to trade Wells Fargo. It's the crappiest. Everybody hates it. It's the bad boy. So it's kind of like every stone has been turned. Hopefully, it's you're not buying total froth. It's already shed. It's stuff. From a valuation perspective, it is the most expensive. I think probably 3 times as expensive Bank of America from a PE perspective. And price to sales is only 1, but its price to book is 60. So if they liquidate the company, you get more money back. So from that perspective, but also Bank of America and Wells have extra risk from the homeowners situation. We have the forbearance programs, which are ending. If you didn't kick the can again, you ended, and now you're faced with a bill. You're probably in negotiations to get out of that with the bank. If you have great credit, then they will do an extension, so they'll put the payments in the back end of the loan, which is ideal. Most of the people that don't have great credit don't have that. They're going to have to make payments that are accelerated, so or pay the whole thing, or recast the loan. So that was called loan modification, which is bad for credit, which is bad for data, bank data, and all of that. So Bank of America and Wells are probably the 2 biggest exposed to that, less so JP and Goldman. So know what you're chasing. This is nice, but look, higher lows, lower highs, something's going to happen, prior failing points. I would rather miss out on the extra $1 or $2 to see what they're going to do right here if they're going to break out. So how do I know? I mean, depends on how fast you're trading and what are your objectives. If you don't know, then you're just winging it. Like, what is this? At least wait until they break through this. What is that? 220, at least. Look how pointy it was back here and here and here. So these are not easy resistance levels to bust through. What do they call that? Overhead supply. But it is how you build an inverse head and shoulders, how you build a cup and handle. You take a few stabs at it, few fails at it, and then Once they break above, you chase it. That has happened recently, and I'm trying to remember who I issued that. Oh, the Dow, the DIA happened, the IWM had happened. I issued triggers on those two. There were huge wins in the last couple of days. Nikola happened, but that was not the case. It was just us selling puts into fear, and man, was that a big win the next day. So know the levels you're trading. Don't be a sheeple. Don't just buy it because it's going. So important part of this is the TLT. The TLT is falling into support. How do I know that? This is where it broke out from last time. So last time it was here, they had a rally this big. So this is pretty big for the TLT. 3%, 4%. So the buyers of that rally are saying, hey, last time I bought it here, I made money. So they're going to step in. It's a pivot zone. It's not likely to be butter, although headlines could make it butter. And if this fails, this will not. You've heard of TINA. TINA helps this guy, and it helps stocks, but it helps this guy. TINA was established for this guy. Why is that? In Europe, it costs you money to buy bonds. What you say? Yes. You go to take a bond, you buy a bond, you're lending the government money, and the government is saying, thanks a lot for the money, give me some money for the cab ride to go get the money from you. So it just doesn't make sense. So if any big money outfits out there, they want to invest in bonds, this is the quote safe bet. They have to buy U.S. bonds, regardless of how low the yield is. So what is the yield? The TNX will give you the 10-year yield, for example. That's the reason why banks are spiking. Not because we got COVID. Banks don't give a shit about COVID. So it's because people are programmed, machines are programmed, when yields spike, I buy banks. So to me, when this happened, look, yield is going into what? Prior fails. And a huge pivot. Look at the size of this head and shoulder that brought this. This head and shoulders brought this. Now they're back to the neckline. You think they're going to slice through it on the first attempt? I don't think so. So my guess is it's better to wait out the bank trade today. At least today. You missed out already. If you're not long, why the hell are you getting long right now? So at least do it by selling put spreads so you don't even need a rally to win. But even then, I don't like to do it on a big up day. Hopefully this puts some light into, or at least the other side of the CNBC regurgitation. You got to buy banks. They had a whole segment of why banks are great right now. Well, banks have been great forever, but also forever, banks have not been able to hold their rallies. I remember I triggered a long JP Morgan, one of these three rallies. It was going into earnings, so I'm going to say this one. So I saw a trigger off of this. I went JP and WFC, so Wells Fargo. I said, I don't usually buy calls, but these look like fantastic triggers. We went long. Both paid huge. I booked mine at like 2 or 3 times, and I was early because JP Morgan the next day spiked even higher. So I'm not telling you this is the top. I'm telling you it's top-ish. So this is Bank of America. But it was about that time. Anyway, Nick signing out. Enough on this subject. Don't forget to subscribe to the channel.